So let's talk about day trading versus swing trading, specifically overnight swing trading in a few moments. Obviously, that's an area we really like to focus on at SPY tomorrow, but there are many different ways to trade, obviously. And day trading certainly gets the attention of people who want to start making money in the market because, well, it looks so easy. I mean, obviously, you get in here, you get out there. All the gurus tell you exactly when and how, and it should be no problem at all. You're smart enough, you can figure it out. Unfortunately, the dream killer often hits many day traders. And what is the dream killer? That's you and me and our emotions that get the best of us, second guessing ourselves and doubling down when things aren't working because we're going to make it back. We're going to make it up. And the next thing we know, our account slowly drains. Look, we all go through drawdowns. That's a common thing. And knowing how to deal with them is an important part of any type of trading because it doesn't work every single day. You go in streaks where it seems like you are unstoppable. You are a genius. And then there are times like, man, this system just will never work. And you're wondering what to do. And usually the answer is to stay the course and learn how to make adjustments a little bit better. Now, when day trading, we're often going for smaller moves. We're looking for signals. Now, some people use supply and demand. They set up supply and demand areas, and it's kind of a resistance system where you're looking at the areas in which people start buying, and then there's a point in when they start buying, then the stock often will go up, and then there's a point at which people start selling, and then that's when you sell, and you use that system. But you can also use moving averages and money flow and MACD. And there are probably thousands of different signals out there. Swing traders are long-term traders, are more, well, not necessarily long-term, but longer term quite often. In other words, they go for multiple days, but sometimes even months based off of a very specific signal. And that could be a MACD signal. That could be moving averages signal when certain moving averages cross the 50 and the 200-day moving average cross, then there's a bullish signal and then there's a bearish signal and you get in and out and you trade that way. Or again, MACD is a very popular one, but there's also VWAP, which is excellent. I think VWAP is an excellent technical signal, and you can use that in your day trading or even longer term trading, quite honestly, if you want to. It just depends on the way you wish to approach it. Sometimes you use multiple signals. So the difference between day trading and swing trading is day traders tend to get in the market in the morning, and then they get out at some point during the day and they leave the trading day with nothing in the market as far as their trading platform goes. They may have long-term investments and so forth, but as far as their trading goes, they're out and they can sleep well at night. Where when you're dealing with swing trading, as I mentioned, you could be looking at a few days or a few weeks or even a few months just waiting for your signals. And as you get experience, you'll start to understand when to take action or using a combination of signals that'll allow you to feel confident of when to get in and when to get out of the market and the types of plays you want to focus on. And quite often, a swing trader may just focus on, well, even true with day traders. And let me just say this. Let me say that I think the best swing traders or day traders focus very specifically on a stock, and they get to know that stock or ETF really well, like SPY or Apple or IBM. Now, some day traders are looking for setups. Like when they see a certain pattern in the market, the way a specific stock or ETF is trading, the way it's the price action is moving, and they'll say, "Oh, that's a setup." Maybe they're playing the gap, which is something that we do in overnight swing trading, which we'll talk about in a moment. They play the gap. They'll see, "Hey, this type of stock shot up really high. And so then they're going to short it as it comes down. It opens really high and then the short come down. The thing is, when you're day trading, as I mentioned, emotion will often get the best of you. Only 5 to 10% of day traders do well because they're the ones that do well are consistent in what they do. They do the same thing over and over again. And quite often it's boring. If your trading is exciting, sure, there's some great moments here and there with a big unexpected move up or something like that. But for the most part, it should just be routine and it shouldn't be exciting. You know, you have your goals, you have the way in which you trade set up, and you keep doing the same thing over and over again, maximizing your gains, minimizing your losses over and over again without getting that emotion wrapped up into your trade where you, oh, that one I lost too much, I'm going to make it up here. And no, you just wait for the next setup or the next signal and you stick with that discipline. It's that discipline that makes a day trader a great day trader. And that's why 95% of people don't do it. Swing trading is a little more, I think, is better because one, we're not looking for little moves. Because what often happens in day trading, unless you really are, and I gotta tell you, I'm not knocking day trading. I'm in awe of great day traders. They do some amazing work. But the thing is, you have all day to mess up. you mess up once in the morning, you can mess up a few minutes later, mess up a few, you can take your whole account down. Where a swing trader is waiting for signals. And so you may have a few days or a few hours or however you like to do it. And you can wait for those signals with a little more patience. And over time, you'll get better. You won't be trading in and out even every day. You'll just sit and wait for the next signal. And when you see the signal, then you sell out. Is everyone a winner? Of course not. But you have to understand that. And you know over time that this system, this approach, these signals tend to work most of the time because you've back tested them or you paper traded ahead of time to see how it works. And you see, yeah, it generally works. And these are the things I need to know and keep an eye out for. And I'll play this swing trade the way it's intended with these specific signals. Now, overnight swing trading, again, like regular swing trading, is a little bit different. It's high risk, just like all of these systems: day trading, swing trading, overnight swing trading. Overnight swing trading is between traditional swing trading, which I look at as a few day, few week, few month a method, where overnight swing trading is kind of that what I look at as a sweet spot between day trading and swing trading. And one reason I like it is because, well, I can't get in my own way as easily because I often base it off of time, but not always. It just depends on how hands-on you want to be. You can day trade your way out of the position, but what we do is that we buy at the end of the trading day and we sell in the morning. And so we need a signal to give us a hint as to, what's going to happen tomorrow. We may look at the news. We may look at, say, what happens during certain earnings sessions. Maybe it seems like a specific company often will give us a good earnings report, and the stock takes off. Or maybe it drops after the news, whatever it may be. Or maybe a day after the earnings, it pops up and then all the fever calms down. And then you notice that then it starts to fall off and then it goes down maybe a couple percent after the earnings on average most of the time. Then so you play to the downside. These are things you can look at in terms of overnight swing trading. That last example is a couple days, but even overnight you can kind of do that. But you look for a signal of some sort. Maybe it's put to option ratios. Maybe it's the last tick of the day. The last movement of the day. Maybe that follows through the next day on average. There are a lot of ways to go about it, and it also depends on the stock or ETF that you are trading. Now, SPY tomorrow, We use a signal. We have a signal that we use, and it's free on the front page of spytomorrow.com, and we post it at 4 o'clock. If you have access, you can also have access to the probability number. So yeah, it said up, but what was the probability? Was it 52% probability or 80% probability? That's important to use because you want to understand maybe your position size, how aggressive or not you wish to be overnight. So whatever system you use for your overnight swing trade, what you're trying to do is take advantage of the overnight gap. So with day trading, we're just looking at little moves here and there. Some people will even say, hey, I hit 0.5%, I'm out. And then I'll, get out at 0.25% loss. You'll have a smaller loss and a little bit higher gain. I don't necessarily like doing that because capping your gains, that can be a downfall because you may have more losses than gains. And when you have a good run, you want to keep it going, keep following it as far as I'm concerned, because it's, when we overnight swing trade, quite often it's 2, 3, 4 days during the month that makes the whole month. It was a really good, we were pointing the right direction and we had a great move and we made 100, 200, 300% on that move a couple times, maybe 50% one time, 100 another time, and 75 another time. It's usually a few days during that month. And that makes up, because if you're right 55, 65, 70% of the time, a lot of those moves are going to be small, and or maybe even a small loss if there's not a big move if you use options. And that's quite often what we do with our overnight swing trades, because we want to maximize our gains and minimize our losses. And we want a little bit of a hedge overnight, because day trading, there's an advantage with day trading. Day trading, you can put a stop. As I mentioned, you can minimize that loss with a stop. Say, hey, market goes against my theory, my idea, and I'm just going to automatically stop out if I lose 25 cents or a 0.5% or 1/4% or 1/10%, whatever it may be, and then maybe even stop out if you get to a certain point. But like I said, I kind of don't like to do that. So when you're overnight swing trading, you don't have that option. You buy at the end of the trading day, and the same even for longer term swing trades. You can certainly get out of your trade during the trading days, but overnight, you don't know what's happening overnight. So we have our signal, we follow our signal, and then that's it. We're in until the next morning. That's an advantage and a disadvantage. The advantage is we're not messing our trade up. we're not doing things overnight, to try to fix things or second guess the trade. You have to wait until the next morning. And so that's an advantage. But if you want to minimize your losses, one of the things you can do is put on a little bit of a hedge, which would be, so we use ratio trades. And that means if let's say your signal says up and it's a strong up, it looks like all of your indicators are pointing up. Well, then, hey, point up with maybe a 3-to-1, 4-to-1 ratio. And with that 4-to-1 ratio, that means maybe you'd buy 4 calls to 1 put at the same strike price. Or let's say you buy a $200 call and then a 50-cent put as a hedge. Now, if the market doesn't go anywhere by the next morning, you could lose a little bit of money on both sides. It just happens. When we're trading options, we need movement. And so it's important to keep an eye on the IV. What is the IV of the stock, the option that you're trading? We like it to be between 20 and 30. That's our favorite position, but it just depends on your approach and what it is you're trading and the way you go about it. You can have a lower IV if you're not hedging. So if you just buy a call and it moves a little bit, you could make some money, break even with a small move. But when you have a hedge, you generally do need a bigger move. So you have to look at that. Is there a lot of volatility or not? And if there's not a lot of volatility, you're just going to have a smaller position size in the direction of your call. So rather than buying a $200 $200 call, you might want to buy a $75 one. It's 75 cents, $75 call rather than the 200. That way your loss, if it does go against you, there's a news event overnight or the next morning, earnings call doesn't go right, the government numbers aren't correct the next morning when they're released, whatever it may be, you're not going to lose as much. You're going to take a small percentage of your portfolio, a smaller percentage of your portfolio. So you need to decide what is that you want to do. So that's what we do with overnight swing trading, and over a month, over a few months, we keep an eye on it, and it's a long-term play. So swing trading in general is a long-term play. Swing trading, again, over weeks or months, but even the overnight swing trades, we tend to not judge them just like day trading. Again, it's kind of in between the longer-term swing trading and day trading. You don't judge your system based off of 2 or 3 trades. You base it off of the experience of knowing, the different markets that you're running that trade in, and knowing that, hey, when it's a flatter market, you very well may not make as much or even lose a little bit. So maybe you don't even want to be in the market at that time, or you look for another stock to trade if your ETF or stock is just really not doing what you think it should do or following your indicator very well. So these are the things you need to consider. But I think swing trading as a whole is easier than day trading, whether you're the long-term swing trader or the overnight swing trader. Probably longer-term swing trading is easier than overnight swing trading. But I like being involved each day. I do a little something each day, and I'm learning and getting better and better by doing that overnight swing trade, because I want to get that gap in play and take advantage of that gap each night. And so I'm a little more active like a day trader, but I'm not as passive in terms of waiting for the next signal as a longer term swing trader, but nor am I dealing with the frustrations of day trading. So I think that people have a better chance of being successful with your overnight swing trade and your longer term swing trades. So I think in terms of success, I bet long term swing trades, you're not as involved, are probably stronger if once you get your system down. And maybe it may take longer to get that system down with long term swing trades versus the overnight, because you have overnight. You can see what went wrong last night and the night before, and you can keep track of things and keep track of your indicators and see which indicators seem to be working best for you. And then, of course, day trading, you get a crash course each day, because you're going to have multiple trades quite often. Now, some people will be out of their day trades by, say, 11 o'clock or so, even noon. And you can do the same with your overnight swing trade. Some people just get out at the very beginning of the trading day. I tend to set because I don't want to be, well, I don't want to get in my own way. I'll buy my position at the end of the trading day, and I'll automatically set a sell time the next morning. Quite often, not right after, but maybe a half hour later in the morning. Let that trade set up a little bit more, and that way I know I'm gonna get out of that trade, but I don't have to worry about it until it's time to buy again later, and then I can see, oh, well, what happened? How did that work? And if I notice that, hey, you know what, 10:30 as of late seems to be the best time to get out, great. Or maybe the trend tends to be, noon seems to be the best time to get out. Then I'll do that. I'll set it up for myself that way. And the reason I do that, it's a level 1 trade, and we've talked about this in other shows before, is that honestly, if you try to get out at a level 5, you better have a system down. Maybe you are using VWAP or some kind of money flow system, or a supply demand. I don't know. There are so many different ways you could approach it, but you better be good at it. Otherwise, when you're getting out in the morning of your overnight swing trade or any trade, and you're doing it manually, well, you're risking your profits, because, well, you're getting involved in a way that helps many day traders fail, to be quite honest. So I like to say, look, I'm not going to win it every time, but I do know that quite often when I let my trades mature a little bit, I'll have over the long term a better result. And look, if you're doing better than 5-10% a month, you're doing well. And yeah, some months are going to not do as well, and some months are going to be amazing. I mean, I will double my account in a month doing what I do. But then there's some months that I'm down 10% or 20%. It happens. In other months, I'm up 50%, 75%. But I'm looking at it as an overall. At the end of the year, I did better than the index. I did better than the, you know, any kind of mutual fund or any kind of financial advisor would have done for me because I was more aggressive, but I was disciplined, knowing that there are going to be rough times. And when there are rough times, I'm not I'm not doing things that are going to make it worse. And I think that's really the big takeaway in terms of all these systems, day trading and overnight swing trading and long-term swing trading. The biggest factor is you making a bad situation worse. When I made bad situations worse, and rather than look, if things are not going well, pull back, don't double down. And yes, there are going to be times when you pull back and guess what? It all goes your way and you don't make as much as you thought you should have. But that's okay. Once things get back in sync again with your system, because sometimes systems go out of sync, once you see it's getting back in sync again, you can ramp it back up. You don't have to make all of your money in one trade. Let it be over a month, over a week, over a month, over a few months, over a year ultimately, and then each week review what went well and then what didn't go well and make adjustments, and then over a month and continue. And you'll gradually get better. And you'll also, when you have a 1,000-foot view, you can see better that look, there are good and bad times. And I don't think you see that as easily with day trading because day trading is so focused in on those moments. But I could be wrong. Let me know in the comments below if that's the way you feel. What do you like to do? Do you like to day trade? Do you like to overnight swing trade? Do you like to long-term swing trade? Or, hey, are you a Warren Buffett investor? Let me know in the comments. I'll talk to you next time